Good morning, everyone. Greg here, Master Trader. So, hey, what do you guys think? Are we back to going to make new all-time highs here? Is that the low? Or is this the rollover point where we come down and test major support? I mean, in the past year, these markets have recovered what would seem totally impossible from, meaning, a crack like this that happened back here in May. A V bottom right back up again and a chop here. And by the way, these markings that I put here, they either happen beforehand. I mean, as the pattern develops, to see if it's going to correct further, I'm pointing out these setups as they happen. This post that I gave to our subscribers happened long before this break in the market. That was based on the market internals. And then this was the shock bar or pattern that I marked it that day prior to this break. And this is, pretty common reaction to that type of a failure pattern. So, here we come up into this, what we call minor resistance area, where the sellers should be. And in prior videos, I've pointed out the fact that a wide range bar in a higher time frame is a momentum move in a smaller time frame. Now, so the wide range bar like this is a strong indication of power in the direction of the wide range bar, which suggests it's going to continue in that direction, typically after some type of a counter reaction. And that's what we have happening right here. The reaction so far is actually a little bit more than what would be the norm based on a drop like this. Most of the time they stay in the bottom third of the wide range bar. Now, the other thing to keep in mind with a wide range bar is that while it is a strong signal of, in this case, weakness and continued move to the downside, it's actually the weakest part of the intraday chart because there's no resistance because of the momentum move or the void. So you got the void over here, little consolidation there, but here we had the breakdown failure. Mark that off for you. We're consolidated here, and this is a very low odds short if you saw this type of pattern in any time frame, meaning here's the initial break where would be the ideal place to short. It was the drop, and then the minor retracement, which would be okay because it's the first move down, and then would be okay to short that. And then a lot of traders get caught up in, they want the base or the consolidation and then to short that. And that is a low odds entry point because it's already extended in one direction. Now, the wide range bar, back to that concept, and the momentum move, there's little to no resistance. So here we have prices that are, consolidating here on the way up, which would suggest a continuation up into that area, and we'll see if that happens or whether what I look for in these type of scenarios where you have a big break, there's a void, it isn't into resistance. Well, how do I get short with a high odds pattern? Well, this isn't it. I look for, let's clean this up. What I look for is a retest of a current swing high in this case. So this makes the high, and then it retests, and it makes what we call an M top, right? M top, and then you can short the break there in the direction of this power, okay? All right, so let's take a look at the cues. We have a little bit more to go on there as far as the correction and from the past and what I pointed out to. And in previous videos, I pointed out that, the size of the moves prior to a correction, right? Just about 7%, 6%, almost 7%, right? I pointed this out just a couple of weeks ago. And so then here was the signal. It held up, and then we got the topping tail, breakout failure, the shock, and the break. And now here, we're getting a retracement up into that minor resistance area. So in this video, what I've done is I've marked the prior correction as to the extent of where it went to, which was aligned with this major support area. And now the major support area is here, and we have this void. So, and it's coming up into minor resistance. And, about an equal move to the prior would put it around, into this area here, 56.40, 56.80. The major resistance area is lower, but prices could stop. Let's do this. So we'll make it an area. And that's kind of like how I like to mark the area where there's been multiple bars of congestion. Right? So somewhere in this area. And these type of measured move situations that kind of, okay, this was the correction, so maybe the correction will be about the same. They usually line up with some support anyway. Everything's about price, support, resistance, trend lines, fib lines, channels, Bollinger Bands, all of that stuff for you trying to locate support and resistance. Remove it. It's useless. It's subjective. It's all about price. Okay, so the question is, does it stop here, at this resistance area, which here's the momentum move to the downside? There's very little resistance here, because, you're looking at all of this and saying, what do you mean, Greg? There's a lot of resistance there. Well, in reality, prices traded down, back up, back down again. And so there's the concept of utilizing or neutralizing where you've used prior reference points in the past. And here's that momentum move. And if you look at it, from an intraday perspective and what's directly to the left of price, you see there's really little here. And again, that's the risk with wide range bars. And the key to real or strong supply, sellers being in control, is the fact that when you get the wide range bar, prices stay in the lower third and then they drop again. So we've got more than 50% of this recovered back up into here. Now the question is, can it, stall here and then roll back to the downside again? But if it retraces all the way back up here, it's like, well, here we go again. Whippy, wild market, but that's also an indication of an intermediate term top, that wild, whippy type of action prior to a larger correction. But we shall see what this week brings. This week on Key for Earnings, it's going to be a huge week for retail, which has been under selling pressure for quite some time. Just looking at the daily chart here, you can see the downtrend. And, we've got the likes of Walmart and Foot Locker and, quite a Coach, quite a number, which I believe starts tomorrow toward the end of the week. So there should be some action in the retail sector. We'll see if this is ready for another leg down or whether it's going to recover here. Walmart has... there's Walmart. It's, the blue chip of them. And, this came back from this initial break back up to new highs again. So we're going to see what the reaction is. That's actually later in the week. And, financials, which have been looking great, they pulled in with the market. And a lot of times that happens with a sector, even one showing relative strength, that it succumbs to a market beginning to correct. So you want to see what happens. How quickly does it recover? Last thing I'm going to look at with you is the transports, which, they started to correct ahead of time, as did the Russell, and now we've got this retest. So I'm interested to see if this retest can actually hold. And one of the stocks of interest, and other airlines, although it's made a lower low, it's at the 200 and a nice reversal on Friday, and it's popping up here. Pre-market. So airlines could have some recovery. And with that in mind, let's just take a peek at oil. Really not doing much, but, where oil has had this rally, energy stocks have done nothing. So one of them is a lie here. So some things to keep an eye on here at the beginning of the week, and we'll see where this all goes. If you want more in-depth analysis as to what's happening in the broader markets and sectors, market internals into market analysis, mastertrader.com. Take a trial. Do our advisory letter. And, a lot of options trades, some trades in the underlying, and a lot of education. Okay, guys, we will talk tomorrow.